Jeff Peterson from Heartland Farm Partners is our marketing analyst this week. It was another big week for the soybean market, with March soybeans reaching above $14 a bushel midweek. Looking ahead at the calendar for March, 3 potentially key USDA reports occur on Monday the 10th and 3 weeks later on the 31st. The first on the 10th will feature the release of the March crop report, while the last day of the month will showcase the quarterly stocks report and the projections for prospective plantings. Looking ahead at what March has in store after a strong February, we talked with Jeff Friday morning. Soybeans yesterday on Thursday saw a big trade range, and they closed down in the end, but they started up again this morning. What do you think has really fueled soybeans here?
You know, and that's a question we're getting asked a lot in the different farm shows we're doing and the meetings, Jeff. And really it's all about the amount of soybeans that are out there. I think there's plenty of beans in the right place, but right now what it really looks like is everybody says, you know, are we going to run out in the U.S.? That's what's really driving this market.
How much is the export market contributing to that?
You know, and it's all about the exports, because right now we're 107% of the USDA number already, and that's an extra 100 million bushels. So somehow we have to find out a way, because if we take those 100 million bushels out of our carryout, we're down to about 50 million bushels left, and that's not enough soybeans.
You saw yesterday morning beans took off on fire and then they closed down in the end. You thought, okay, maybe this is it, maybe the ship has turned. If it does turn, how ugly will it be once it does?
I think the best way to really look at that is take a look at a chart, and as fast as we went up is probably as fast as we come back down. So I think there's definitely at some point. Now, whether we've done that or not yet, Jeff, I don't think we probably have yet. I don't think we've solved the problems yet. So I think we've got a little bit more time yet.
Where would the chart levels of support be?
You know, the first level we'd really look at would be 1377. That'd be a very natural level that we broke through on the way up, so it becomes resistance. And then once we go down below that, then we'd be at 1339.
If you had old crop left of soybeans, is this the opportunity to sell?
It is. I would gradually go ahead and make sales on this move in here and get them moved. By the time this thing's over, I'd want to be out of old crop beans.
And new crop, is this an opportunity to sell as well?
It is. I mean, we've been looking for an opportunity to get prices sold up in these areas. I would use it as a way to get sold up to my crop insurance levels on this move.
Where are the contracts at here? Are they long? Are they short?
Yeah, as we take a look at the speculators in this market, they're long, Jeff. They're long as 250,000 contracts. That would be as long as they were going clear back to when we had the big drought in 2012.
So they see some potential yet?
They do. They see a situation that hasn't been corrected yet. What everybody's looking for is China to come in and actually get out of trades. And so far on the export side, they have not done that. They've continued to keep all those sales on the books.
All right, the question to the south then. South America, Argentina, and Brazil, if they do in fact produce record crops, when does that influence come in and how much can it be?
Well, actually, everybody's a little surprised that the influence hasn't been there already. We've got, you know, Brazil approaching about 45% harvested by this weekend. So those bushels are definitely making it to the ports, and they're actually flowing out of the ports on their way to China and the other markets. But at some point here, probably within the next month, we will see a point in which the demand switches to South America, and that will have a big impact on our old crop soybeans.
One more thing on old crop soybeans. The futures market has taken off, obviously, but has basis been able to keep up with it?
You know, it hasn't been as bad as what we thought. Now, it depends on whether you're at a soybean processing plant or in an elevator. On a soybean processing plant, you've probably seen the basis back off about 15 cents, which isn't bad for the big run that we've actually had. So there has been some good demand on the old crop beans.
Let's talk old crop corn. They've kind of tagged along here with soybeans, certainly not to the same extent, but would you be maybe unloading some bushels as well here?
I would use this move also to even move on the old crop side. You know, basis hasn't backed off quite as much there as we've seen on the bean side. At a really strong, you know, at an ethanol plant, that's where that demand can change quite a bit. Depends on whether they get full or not. We've seen it back off about 15 cents a bushel. At a really strong elevator that's loading out trains, backed off about a nickel. But I guess I would use this as a place to let go of old crop corn. I think some point in here I'd be wanting to get, you know, if not sold out, really close to that on corn.
What are your general thoughts on the export scene in corn? We discussed soybeans already, but in corn, how strong has that market been?
It's been all right. We're at about 89% of what USDA is forecasting. And now here's where you get two camps. One camp says, well, 89%, that's a new record in regard to how quickly we've made those sales. The only challenging part is we're not shipping them out quite fast enough. As a matter of fact, the last 9 weeks, export shipments have shown that we're below the pace needed to meet the numbers. So we're thinking USDA has probably their corn export number about right.
Would you be a seller for new crop at this level?
I think this move has given us a point where we will want to sell new crop. I, on this type of move, would want to get up to your crop insurance levels there also on this move. I think it offers a chance to lock in some profitability.
Is it at the break-even level, in your math at least?
In our math, depending on the area where you're at and depending on your basis, I would say in most cases it is, but I think there's probably still 15 or 20% of the people out there that it may not be. But this may be the type of year for some of those that they may still need to lock this in, because I don't know if it's going to get a lot better.